Crypto market right now is at $1.26 trillion. Bitcoin at 28,426. But I think the macro is playing out heavily in this market right now, and we may get some volatility. On the short-term charts, we are looking at this and saying like, okay, there is still a possibility that the market may surprise you. If it actually runs up, hitting some of the shorts out of the market, that should not surprise you because the market is now trying to digest the macro signals. People are literally looking to see what's happening, and it is not good in terms of your financial structure. And if you are looking at the market in a way like, okay, what do I look forward to? Understand it's always important to know the macro, the medium term, the micro structure. Yes, we are running in a pattern which has negative bias. It's a rising wedge which usually break to the downside. Last time we came back down, and right now we are testing the resistance. So if we break to the upside, that's an entirely different story. But you know, macro is more important than micro. When you look at the macro structure, this kind of gives ultra bullish signal. This is one of the primary reasons why I personally look at this, which is like, say, short-term charts, short-term ideology in different assets, and I tend to go more into the long-term view. So here, on the long-term view, this is kind of clear. Yeah, you are literally trying to flirt with some of these levels. It is important to look at that. So when Bitcoin shows you on a 3-day chart, you are testing this resistance here. Look at the RSI. It's showing you like I'm trying to break higher. So that's a 3-day chart. Now I'm like, okay, I need more information. Then I go on to a weekly chart. The weekly chart is showing me my resistance, major resistance is here, 31,500. And the RSI is saying like, okay, I've already moved above this range. That's the bull flag. You broke through that. And that happens to reflect the fact that RSI is close to here. And I'm like, okay, the RSI is testing something here. So we are not literally testing this level of resistance. We are most likely looking for the macro level, which is what? Which is heavy, which is actually moving way higher. And that, in terms of XRP, is like, okay, look for something better. Now, does that incident really play out inside XRP? Does that resistance, the break of resistance and the story in Bitcoin align with XRP, which shows we are up for a massive rally? Is that true? That's what we are going to detail here. Welcome to the Scientific Investor family, where the normal retail guys get learn how to become the next top 10% of this world. Remember when we talked about these patterns here? Remember what we discussed here? Right now, that is what is happening in the market. Say you zoom in on the short-term chart here. This is a 4-hour chart, not a macro, right? This is a short-term chart. And inside the short-term chart, what we can identify is that the price did something like this, went up, came back down, and then bounced higher. Great, right? That looks good. And it feels like, okay, looking at the price now, it's easy to say that. But we had this thought process here, right? We were talking about this exact possibility, and it was not only in the group. It was here in the YouTube saying just 3 days ago, this is a possibility, don't miss that. And one of the reasons why I say this with this level of confidence is that, yeah, on a daily, you're breaking to the upside. You have a level of resistance which you are now piercing through. Great. And when you enter onto a 3-day chart, look at the RSI. It's now at 80. And it already broke this range of strength. So for me, I'm confused. Okay, that means price is trying to break this level completely off, remove the chains and run further. But the RSI is showing like I've already done that. So I'm now confused, thinking like, okay, what else is the actual resistance? And that is when I move on further onto a weekly, looking at where are we. And weekly shows me I'm testing a resistance here that happens to be a previous support. That's a valid level, but look at the RSI. It is saying, I'm breaking that too. That's a different story. Now you're like, okay, what else are you looking for? The resistance of 0.55 is broken. You are literally testing that in terms of the price, but broken in terms of the RSI. So I jump on to a monthly chart, and that gives me more clarity. You broke this level, and now you're testing the level of 0.6, which happens to be a resistance, which happens to be a support. And right now, the moving average on a monthly is at that level. So I'm like, okay, I won't be surprised if we actually run up there. But short term, we should see some correction. I mean, a 15% correction should not actually surprise us because we have done this recently. And expecting that, I think it's actually normal to come back close to the moving average and then shoot back up. Because when you pump like this, run above the moving average, say 20-25% above the moving average on a short term, usually it's like, okay, people do tend to take profits. And one of the major ideas here is to understand the fact that on a macro, we are showing this exact signal, right? We got a double bottom here. We went up. That's what happened here. We got a double bottom. We went up. Now, is it volatile? Yes, of course. Now, when you go through time and look through all this, I was personally like, okay, we talked about this 2.5 years back when we were here. So that's literally like late July 2020. Saying, I know, the market was saying, we're going down, it's a fake out, get out. But what I was saying is, I was literally taking you guys through the idea there, suggesting, like, even I went through the Google to show you guys, I think this is a Wyckoff pattern which we are breaking through. Great. Now, today, as of today, when you go look at this, you will understand what we talked about. The Wyckoff Creek, when we were here at 0.35, 0.36 somewhere, saying, okay, we are going to shoot up to 0.5, 0.55. Now we are there. It took like how much days? Like 2 weeks, 3 weeks, and we are there. Now, the thought process is, yeah, back in 2020, I told that, but recently, just 2 weeks back, we shared the thought process that the market is doing this. Don't go searching the lows. I think the market is going to the upside. What happened? We know how it ended. And this is one of the video which, cracks me up because I normally don't go that, exuberant and saying like, boom, the market goes high. But here in one of my video, one of my friend actually sent me this saying like, brother, you just showed this in the video and that happened. I'm like, okay, great. So what am I looking at, right? So I go this here and I play that. And it's really interesting to listen to that. We had the exact same idea saying, if we get a close here, that means we are going to get another candle or two, which would be boom. You're going to go through 29,000, 28,000, 30. So that was 2 weeks back when we were flirting with the low level, getting, that confusion of going lower. And that happened. We went up, we came, touched 29,000. So when we are back here, I would urge you guys to look at the macro and a line chart. Then you go look at the candlestick patterns because that now helps you understand what's happening in the market. If you have the ability to read the language of technicals, now we are looking for like, okay, I think the market is actually showing me something. What is that? Now we talked about this, so I'm not going to bore you guys saying like, okay, there is a possibility that we may do the third wave up, which would be like 1, 2, 3, 4, 5 to the upside and then come back down, which is actually interesting because the price is following that. And if that is happening in Bitcoin, look at what XRP can do. Because for me, I'm looking at this like, okay, this is a short-term structure. And here, if you're thinking like, you're going to get the 1, 2, 3, 4, 5, here, you're literally observing the possibility of a microwave. That would be something like this. You may actually do this correction and run up. So that may actually test the range of 0.6, which we just talked about in the macro structure. So it makes sense for me like, okay, if we drop a little bit and then go test 0.6, 0.62 range, I would say like, okay, now that's a strong level the price need to test and break. Recent support resistance and the historical level does suggest that, okay, we are going to test that range. Now, if you look at the indicators on a daily, we are right now here, showing like we are trying to push higher, higher, and higher. The MACD is in the positive zone, breaking through all this. So now we are like, okay, I want more information. Great. That's always good to get more information, right? Isn't it? So while we look at this, RSI suggests like on a 3-day chart, the level of strength is here, which is 80. Last time we had that, we were close to the all-time highs. Before that, we were here. That was after a crazy pump. Now you look at the market saying like, okay, I think there is a lot in similarity with what's happening right now back here. So we have a lot in common from the time of June 2020, May 2020 towards what's happening right now. So the Wyckoff pattern is kind of playing out. And if that does play out, guys, we are looking for a macro run-up, We've been, now remember, one thing you have to understand is we've been waiting for something like this from some time. We've been waiting for this pattern to get completed. We've been waiting for this pattern to break to the upside from like 2 years. And when it is breaking higher, I don't think it is the time to go shorting the market. Now, why I'm saying this is because I have some friends and I saw them following different groups. It's up to them. They went in shorting. Some was like 20x, some was like 50x. Now, I'm like, you're doing crazy going against the market one, against the narrative one, against the liquidity provisions. Meaning you go look at the volume. When the volume is going up, trending up, new money is coming into the market, you don't go against it. You get kicked out. And I saw them, people losing money. And I'm like, don't do that. If you are doing that, make sure it's an isolated position. It's not going to impact your portfolio. Otherwise, your entire portfolio is done. Now, coming back to the same price action, the same method, imagine if we did this short-term structural pattern last time. Now, this volatility is due to the SEC, but the nominal move would have been something like this. And if that's true, now it is true, if we think, okay, we are going to get something similar here, we just talked about that in the last video. Remember how we are going to run up towards the all-time highs. Right now, when we are at 0.5, you may not see a lot of FOMO coming in, but as soon as we break through these levels, there is going to be a ton more people entering the market from different assets. This is going to get super interesting at that level because, say, this is the price action. Great. Now, the strength is retrieved from the price action. You always study from the price action towards here. And look at what it is suggesting you. It is showing you again something which I believe is the point here. You got the exact structure which showed you I'm running back up. And for me, going back in time, if it's me learning from the market, I would say, okay, if I'm looking at this, then I would most likely go to the market to see like, okay, when we were running up here, what did the market show me, right? During the correction here, when the market was running back up, the market actually showed us that it is likely to go back up with an engulfing candle. But the strength clearly gave us the thought process that, yeah, we are going back up. So that was like a textbook pattern. So we had different areas where the price action was showing us like, okay, it really is interesting to understand that the price is doing something which it has already done in the history. Now, this is all human psychology, meaning when the price is going up, people tend to jump into this asset from another asset. That asset drops, this asset goes up. All of that happens. But if you are a mature individual in terms of finance, now we are standing here saying like, okay, we waited for this pattern to evolve from a very long period of time. And now when it is breaking higher, running towards the upside, this is a weekly chart. Remember, this is a weekly chart where you are actually now reaching towards the overbought territory. Now, what does that mean? Whenever you enter that zone, just after that, you get an explosive price action. We are already moving like good. a lot of people are still saying, okay, I recently got a couple of clips, some other YouTubers, and some of the friends were asking like, "What do you think?" And I'm like, everyone has their own opinion, right? And for here, it is a resistance. I don't say this is not a level of resistance, but I'm looking at a macro level on a monthly where it actually suggests me like, okay, I'm already running up. I'm testing this moving average. I don't care about the short term. So for the time being, I would give more weightage to the long term structure until we reach the price discovery zone. Once you are at the all-time highs, now that's four more level. You literally have to go through the short-term structure, maybe a daily, maybe a 12-hour, to look at the divergence. Because if the price action is giving you divergence, now look for corrections. That usually happens in the market. Like you can literally go into a lot of different charts and identify this. And that's one of the reasons why I told there is a possibility that XRP may actually drop and then go back up, right? We're looking for the price like this. The RSI is moving up. Price action is showing this. So it literally kind of coincides with a divergence. If it's me, I would say, okay, there is a possible correction coming. But again, that's a 4-hour chart. What are you really talking about? Because when you're on a macro, the trend is to the upside and trend is your friend. You don't want to go against it. Remember, the macro is so bad. This guy just got hammered in the code saying like, you want more employees, you want more rules, but basically what you're doing is unauthorized rule making. And this guy was being hammered there. He don't even understand what he is doing, because the way we see how Congress is starting to recognize things, it is actually great. Now, we come here, we are looking at this while we are recording the video, and I'm like, okay, we had this pattern, we got this correction. What is the possibility that the market can actually surprise a lot of people and then go back down? So on a 4-hour chart, it is really like, okay, it is a possible move. You don't deny that fact. And now I'm zooming in, looking at hourly chart. So here on the hourly structure for Bitcoin, it actually shows me like, okay, don't go completely bearish until you break the structure to the downside. If you are breaking to the upside, now that's an entirely different story, because for this particular bull flag, if you're optimistic, you can take it from here. And if you're like, okay, I'm conservative, take it from here. Still, that's a critical move to the upside. Say that's a 4% move after the breakout. That actually takes you all the way close to $30,000. And short term, Bitcoin doing that means a lot of people are going to be kicked out of the market if you are shorting this market, right? Because the market surprises us in a lot of different ways. Like, look at this particular correction and going back up, which kind of looks similar to this V-shaped recovery. Now, you remember, if you have been watching this channel, you already know what we were talking about when the price was dropping and a lot of people were giving you the thought process of, we are going down. Like, we talked about the V-shaped recovery, and we are so happy to see that the market did just that. So now when you're in the market, yes, there is opportunities popping. There's a lot of altcoins starting to take off. Some of them like Hydra, Algo, it's like, macro coins, which are like fundamental tokens. But understand, some of them are still below major resistance. Don't go overexposed when that's below a major resistance. We talked about this for EOS like a year back, and it is still below that particular level. Whereas the other asset we entered went up, right? So that's a huge difference. So if you are looking for something like this for a lot of different assets, look for Patreon. The link is given in the description below, where we go through a ton of these and post opportunities just like this, right? We had the talk about this. Okay, we're going to go up. This is the possibility. The volume is high. We are breaking. RSI is suggesting this. And then look at your target and where you are right now. And then go here. You went even higher than that. And I'm like, okay, that's actually a great news. You took your profits, you moved out. Then we had the next one, the next call. It's working out. It's actually going crazy. And look at the market. When the volume is entering, you don't go against it. If you do, that's bad. Taking profits is always good. If you know the target, you're on a time horizon, 4-hour chart, 12-hour chart, take profits, move out. Don't jump into a daily chart and say, okay, now my target is this. Because there is a likely scenario you may hit the target and correct back down. So you don't want to go that way, either long term or short term, take profits, get out, because the market can go crazy at any time. You don't want to be in the market at that point of time. If you are levered like 20, 30, 40, 50x, there is no choice. You are going to be kicked out. So always maintain your positions, always understand your risk, balance what you are about to do in the market. So guys, if you received value for your time, please do hit that like and subscribe button if you haven't done that already. I'll meet you guys on the next video. Bye for now.